We're live.
All right. Hello, everybody. We are here today with a great personal friend and business partner, Corbin Olson, who is the president of Movement Home Loans. We wanted to be able to do a video and be able to share some information for our friends and family and past clients and for the public about everything that's going on right now in the mortgage world and in the mortgage industry and just I don't know, hopefully talk about some things that maybe you didn't think about, or just, helping everyone try to know what their options are and thinking, make sure that you're considering everything. So we thought we better bring in the expert. So Corbin, thank you so much for joining us today.
Yeah, absolutely. Happy to be here with you guys. Thank you.
Yeah. So I think the thing that's probably on top of most people's minds is all this stuff about forbearance and deferment and do I have to pay my mortgage? So let's just tackle that first. I think that's the number one thing that people want to know. Do they have to? Should they? Shouldn't they? And what are the possible consequences and all that? So would you mind kind of going into some of that information for our people?
Yeah, absolutely. So I guess I'll start to say, first of all, if you've been negatively affected income-wise from COVID-19 and you can now make your mortgage payments and there is not money in the bank to pay that mortgage, then absolutely you should call your servicer and apply. And that's what the program is there for. And so you should absolutely take advantage of it if you need the help. No doubt about it. On the other hand, it's kind of funny, different than 2008 when a lot of people were struggling to make their mortgage payment. It was really hard back then to get any sort of a deferment or a forbearance or modification done. They took you through the ringer on trying to prove, a hardship. And it's the opposite now. You basically, it's from what I understand, it's fairly easy, and you just have to sign an affidavit that you've been negatively impacted by COVID-19. And you will likely, be approved or qualify for some sort of a forbearance plan. And so it leaves room for a lot of, kind of fraud or things to happen. Very different, like I said, than 2008, because back then, very hard to prove. Now it's fairly easy to prove. But it leaves a door open, I think, for a lot of people just to apply for it and do it when they may not need it. And then on that same token, Merrill, you kind of mentioned that we don't know, the consequences of going into that forbearance plan, because they've not really been totally detailed out by Fannie Mae and Freddie Mac and some of the big aggregators who are making the rules. They've not really told us exactly how it's going to work. So, for example, let's just say that you call in and you apply for some sort of a forbearance plan. They say, yep, you don't have to make payments for the next 90 days, but they didn't really lay out a plan for you of how you're going to pay that back, because at the end of the day, for sure, nothing is free. You're not going to get out of paying the payments. It's just we're just putting them on the back burner for now, and you're going to have to pay them back at a later time. But when are you going to have to pay those back? We don't know yet. So at the end of 90 days or 6 months, they may come to you and say, hey, you owe us $18,000 for these payments. Now you're back working again. We can see that. We have pay stubs, whatever. And whether they want the whole balance due at that point, or they're going to take that $18,000 and amortize it over the next 12 to 24 months. It could have a pretty significant impact of maybe $500 a month increase in payment or more for the next 12 to 24 months or something, while you have to pay that back. So there's just...
I guess what I'm hearing, Corbin, is that people really need to know what they're getting into, right? Like, what are the terms of the forbearance?
Yes. What are the terms of forbearance? And exactly. And it just kind of brings up well, I do have that money in my savings account. Maybe I should use some of that to pay my mortgage because my income's only been reduced a little bit. I think I can still make ends meet by still paying the mortgage. Things like that, because you just may not know the consequences. And then, to be honest, it's I think this is 2 weeks ago, but I know in one day, Quicken Loans got 50,000 requests on one Sunday for forbearance, for people to go into forbearance. Now, of course, in the short amount of time that we've been in this whole, coronavirus, COVID-19 era, whatever, companies can't staff up that quick and train people that quick. So it's really important that you really get really clear, concise information from the person that you're talking with, because they're not all fully trained on what exactly is going on and what the consequences may be. So just make sure you really understand and you have something in writing, so you know, okay, I'm going to be in forbearance for this long, and at the end, this is my plan to pay you back. That you know, you have it in writing, and you know exactly what the plan is before you enter into it.
Yeah, I think a lot of people assume that if their payments get postponed, that they're just going to be added on to the end of the term of their loan. So if they don't make a payment for 3 months right now, then in 2047 or whenever they'll just have 3 more payments that they have to make at that time. But what I'm hearing you say is that's not what everyone is doing. Maybe some places are doing that, but there's other places who are saying, hey, once you're back on your feet, we're going to make you pay the whole amount that you skipped back relatively quickly.
Yeah, that's right. And I think FHA is the only one. So HUD's basically came out. They have a much more clear, concise plan of how it's going to be paid back. And their plan is much like what you said, Merrill. It's going to be, they're going to take, let's just say it was $18,000 over a 6-month period. They're going to take that amount and they're going to apply it back to the end of the loan. And it's just going to sit there until you either refinance or you sell, and then you got to pay that money back. But for every other type of loan product, you know, all conventional loans and VA loans, whatever, it's not very clear when, how it gets paid back.
Is there a way that someone who owns a home can easily find out whether or not they have an FHA? You know, because let's say someone got their mortgage. I mean, you and I, you know, we know because we're in the industry, right? But maybe I got my mortgage 7 years ago, and I don't remember what kind of mortgage I had. Like, you know, is there an easy way for someone to find out if their loan is an FHA or a conventional loan?
You know, on their mortgage statement, it should always say. So it should say whether a USDA, VA, conventional, or FHA. It'll say on the mortgage statement, it'll say what type of loan it is.
Okay.
Yep.
I was just going to throw out, if any of our friends or past clients want to know, we can also look it up in the tax records. You know, it usually tells us whether it's a Fannie Freddie or an FHA loan. So we can usually help you find that if you would like.
Yeah, great point.
And of course, your loan servicer can tell you, but you know how hard it is to get a hold of those guys right now.
Yes. Expect to be on hold for quite some time.
Yeah. So let's say that there's someone who is in a position where they really have lost their income and they're really not able to make their payment. Is it okay for them to just not make the payment, or do they need to contact their servicer about it?
They definitely need to contact their servicer, because even if you've been affected by COVID-19 and you don't put anything in writing, you just think that because you just stop making your payment, for sure they're going to report you as late to the credit bureaus. And yeah, you definitely got to make sure that an agreement is in place before you start missing any payments.
So it's not just an automatic, okay, no one has to make their payments, don't worry about it. You still got to work something out with the servicer, for sure.
Exactly. And I'll bring up another point too, Merrill. It's like, you know, we don't know, like as far as that person who's been in forbearance and them getting a mortgage in the future, even though they've basically said that it's not going to negatively affect someone's credit by going into forbearance, which is a huge deal. We don't know as mortgage lenders how our underwriters and how we're going to look at that in the future, because essentially we're going to get a credit report, and the credit bureaus, they can't report you that you made the payments, because that's just inaccurate information. You didn't make the payments. They can't report you late, so it's just going to show up kind of like as a 0 or NA or something like that, right? So as a mortgage lender, as an underwriter, we're going to be able to look at it and see that the person was in forbearance. And then at that point, the lender then has to make a decision. Hey, do I want to, lend or give a new loan to this person who I know has been in forbearance in, say, the last 6 months or 12 months? So if you're planning on maybe purchasing a home as well in the next 6 to 12 months, you may really want to reconsider. If you're thinking about going into forbearance, you may want to consider that too, because we just don't know the consequences of you going into forbearance and you getting a mortgage in the future.
Right. So kind of one more reason, if you can make your payment, why you really should, because even though they're saying, hey, we're not going to report this as a missed or late payment to the credit bureaus are still going to show that no payment was made. So even if it might not negatively impact your FICO score, and maybe it will, I don't know,
right.
but it could still affect your ability to get new financing in the future.
Yeah,
well, we're already kind of seeing that the effects of COVID-19 in terms of what's going on right now, right? Like, I'm specifically working with a buyer that has student loans and now is unable to use a conventional loan because those loans are in deferment, right? So we don't know exactly how this is going to impact our buying power in the future.
Yep.
But it sounds like the number one thing we need to know is the terms of how we're going to pay that back and when we're going to pay that back, because it's not free money, right? Like they're not just saying, hey, don't worry about making your payment. So get it in writing, let them know, right? Call ahead, contact your loan service provider, but then know what the terms are. Are those terms negotiable, or do I have any rights? Can I say, hey, that doesn't work for me, but I could do this? I mean, do we have any negotiating power?
It's a good question, Christy. I think you do. I think that I don't think the guidelines are like terribly black and white. Otherwise, we'd know the answers to all of these things that we're asking about. But at the end of the day, there's been tons of calls and webinars and all sorts of stuff that I've been a part of. And you have two very high-powered people who have been in the mortgage industry for their entire career, and they're part of making these decisions, and they both have different opinions on how things are supposed to happen. So at the end of the day, I don't necessarily know the answer to that, Christy, but I think that you do, because I think that it's not, like I say, it's not black and white, and there's gonna be plenty of people who, at the end of that 6 month term or whatever, they can't make an extra $500 per month payment or whatever. So I think that there will be some room for some negotiations to happen for sure. I think they're going to try to make it as easy as they can for these people that are in a tough spot.
What should we be watching out for, right? Like in terms of if you're not sure, what are some red flags that we should be looking for as, if we do need to go into forbearance?
Some red flags if you do need to go into forbearance.
Like balloon payments and different things like that.
Well, I think it's a red flag in general. If your lender's not willing to give you what you want, what you agreed on, if they're not willing to give you that in writing, then that's a red flag to me. That's a concern. I'm probably not going to go into anything until I get something in writing, until I know exactly what I'm getting into. So for sure, if they won't give it to you in writing, that's a red flag. Other than that, let's try to think what else to be aware of. Or I think that's probably it. That's a big thing, is just making sure that it's in writing. But other than that, it's just communicating with your servicer, obviously. Make sure that communication's open and you're telling them exactly what's going on and when, and there'll be a second phase of that kind of forbearance plan once you're coming out of it, and you've got to prove that you're back working again and what your income is and all that stuff. There'll be a second phase of it. So.
I think probably the biggest thing that people really need to be looking out for is okay, if you skip 6 payments and the amount of those 6 payments is $10,000, and in 6 months they're going to make you pay that whole $10,000 back over a 12 or 24 month period, it has the potential to significantly increase the amount of your monthly payment. Yeah. So you need to really look at, even if things were back to normal and you're back at work and you're making the same money you were before, will you be able to afford that new payment?
Well, that's a great point, Merrill. And I think I've already heard some people kind of trying to speculate, how many people are going to go into forbearance. Maybe they didn't necessarily need to go into forbearance. Maybe they had a little bit, it was going to be really tight for them, but they could have maybe continued to make the payment. But let's just say they go into forbearance, and then they do get stuck with that $18,000 bill they got to pay back over the next 12 to 24 months. And then that new payment is way higher than what they wanted or whatever. And they end up going into foreclosure because they can't make that new payment, or that new payment's so high that I'll just go rent something else or whatever. And we almost created a worse issue, or we created an issue that wasn't even there. And so trying to anticipate, people are trying to anticipate how many of these forbearance loans are going to go into foreclosure. It's an interesting thing to think about for sure. And it's something that affects all of us, because if we have, let's say 1/3 of all the loans that go into forbearance and go into foreclosure, it's something as all of us as homeowners is going to affect us all, because real estate prices, we're going to flood the market with maybe some supply, and things could get bad.
Well, I want to switch gears on that a little bit if we're done with forbearance and deferment, because the number one question and concern that I'm getting right now is, is all this coronavirus stuff going to send our economy spiraling into a horrible, recession? And if so, is that going to cause a massive crisis for the housing market like we saw in 2008? And so far, I have been I put out a show every single week, and I've been telling everybody that here in Phoenix, anyway, the supply of houses is so low that I really don't see how home values can fall. We even after gaining an additional 20%, a 20% increase in the total number of houses for sale, we're still below the number of homes available for sale as we're right now as there were in April of 2019.
Wow.
So there's just such a massive shortage that, we get out of this and things start getting back to normal and people start getting back to work. We've just got such a massive shortage of inventory that I think home values are going to be fine. Obviously, I don't have a crystal ball. But the question that I'm getting kind of a lot, and I've had several people send things to me, and I know you don't have a crystal ball either, Corbin, but maybe you can just speak to this, is people are concerned about the health of the mortgage industry because, gosh, you've got all these loans going into deferment and people not making their payments, and you keep hearing all these liquidity issues and lenders not having money to make loans. And I think people are just afraid of, gosh, if the mortgage industry collapses, and so I don't know, maybe you have some insight, maybe you don't, maybe we're all just panicking. I don't know. What, do you have anything to say about all that?
Yeah, absolutely. I mean, there for sure has been some reasons to panic. No doubt about it. There's been some crazy stuff that happened in the last couple of weeks. Talking about the liquidity issues. I mean, you have these mortgage companies have spent, a good portion of their operating cash has been spent on meeting these margin calls because of the overall fluctuation in the interest rates. The lenders worrying about the number of loans going into forbearance. I think the most recent issue, I think everything for the most part has been worked out. The Fed initially was spending too much money buying mortgage-backed securities, causing all this volatility. Seems like if they got the message to kind of, hey, slow it down, just buy little teeny portions every day of mortgage-backed securities to help keep things level. They did that. Then the last week,
$100 million a day, not $1 billion.
Yeah. Billions of dollars a day, billions of dollars a day. It's crazy. But that's really kind of worked itself out. And then the last week it was, this whole forbearance thing, and these lenders are looking at their book of loans they service, and they go, man, if I hit a 20-30% forbearance rate, I still got to make payments to my investors, and I can't make payments. I'm going to be buried in like less than 6 months if I got to make payments to my bond investors for these loans of people who are in forbearance and not making their payment. And so they initially had gone to the HFA or whatever, the House Financing Authority, FHFA, and they initially said, hey, we're not going to help you independent mortgage bakers out. If you need help, call your bankruptcy attorney or something else, because we're not going to help. And everyone freaked out. And then just today, literally just today, they came out and basically said they're going to provide at least 4 months of payments or a liquidity, kind of like a line of credit or something like that, to these independent mortgage banks where they can borrow essentially these 4 forbearance payments that they can make to their bond investors. And so that one little rule change they just made today has been is like extremely helpful. Kind of like we've all been waiting for this for We've all been waiting for the last couple of weeks for that to happen. It finally did come through. And so I think there's little things like that it just takes time for the industry or whatever to kind of be telling, hey, this is what we need. This is now the new problem. It's the unintended consequences of making this change over here. And so it just takes time for it to kind of work through the system and for those changes to be made. So I'm generally pretty optimistic about the housing, about interest rates, about the mortgage industry. It seems like the government definitely wants to help however they can. They've made some decisions that have just caused some other things to happen, but they seem to figure that out fairly quick, and then they made an adjustment there. So I think we're actually in a pretty good spot now, and things seem to be moving in the right direction for sure.
Let's touch on interest rates really quick, because that's been a roller coaster ride recently, and I think that people might be afraid, well, gosh, now if mortgages are considered a more volatile investment, right, then maybe that's going to cause interest rates to go up quite a bit over time. So, if I have been thinking about refinancing, or if I want to try to get a better term, is now a good time for that?
Yeah, it's still a really good time. It's I think things in general throughout the rest of this year, rates are going to be pretty low. Our economy is definitely taking a hit. And I think the government's going to do what they can to keep rates low over the next probably at least through the rest of this year. We don't know what's going to happen necessarily next year, but Now is still a great time, and rates are, roughly about 3.25 on a 30-year fixed. So it's still a great rate. It's a little bit tougher on like things like investment properties, or maybe if your credit score is a little bit lower, it's a little bit tougher to get a loan right now. Doesn't mean you can't, but it just means it might be a little bit more expensive right now. Normally, as you like, let's say the rate today is 3.25, and as I go up, say all the way to 4%, it produces this premium, which I can use that premium to pay for loan level price adjustments. So if you're an investment property, if you have a lower credit score, well, the problem is right now that is really flat. So it's almost like the 3.25 and the 4% is almost paying back the same rebate. So on some of the tougher, like an investment property, or if you've got lower credit scores, you may expect to pay a 0.5 point or a point or something like that, where you're normally not used to. May look weird, but all lenders, all of us are basically in the same boat when it comes to that. It's going to be a little more expensive for the short term, but over the next few months, I think that'll work itself out too. But ultimately, rates are still fantastic. To be in the low threes for a 30-year fix is great. I would just give one tip to anyone that is looking, and that is get your information in early, and you kind of have to time it just right. I've told people it's kind of like getting toilet paper at Costco. Like the truck only comes like a couple times a week, and you got to know right when it's going to get there, because otherwise
you better be in line at 4 a.m.
Yeah, otherwise you ain't going to get any. It's gone. So if you get all your stuff in and you get yourself in a position to lock in a rate, especially on a shorter term lock, that's where the pricing is. That's the sweet spot. So get your stuff in, get your credit pulled, get all your income docs in, so your lender can lock you in a short amount of time, and you can take advantage of that toilet paper truck when it gets there.
That's a great analogy. Is there anything else that we haven't touched on that you think is really important for people to know about right now?
I'll talk a little bit just about in general about because I actually have maybe like 4 or 5 loans right now that I'm doing right now where we started the process and there was no change with COVID-19. Everything's great. They were confident about their jobs, their income, whatever. And all of a sudden they get the call and they're like, Corbin, you wouldn't believe what just happened. But I just got a call and my income's been cut. I just had one yesterday, it's cut 7%. So not some huge number, but still 7% ended up being about $1,000 a month for this particular borrower. But I kind of have to requalify him and make sure that the numbers still look good. So it's not like, in the past, like if your income is declining, that's not a good thing in the mortgage world. It's a pretty big red flag for us. But we don't look at it as declining income. It's just more like, hey, during this COVID-19, everyone's taking pay cuts and having to do certain things to make it all work. And so if you have a reduction in income, doesn't mean you're not going to be able to buy a house. It just means we got to qualify you based on the new numbers. And usually it's okay. I even had one gal, and she was literally making $120,000 a year, and she got cut to 60. They cut her 50%. But her husband still got a job. They're in the middle of the loan process. It all worked out. Everything's fine. They had low debt to income ratios to begin with, so not a big deal. You just got to document it with your lender, and that's fine. And then the other thing I'll talk about is just, during the loan process, they're going to do an employment verification like 3 different times during the process, and they're going to do it probably the day of funding or day before funding. So, there's going to be some loans that are probably going to be killed because of that, because we just don't like I was just explaining, there's a lot of borrowers who just sometimes get shocked, like, oh my gosh, I just lost my job, or I just got my pay just got cut. And we may find out on the day of closing. So they may not lose their job on day of closing, but we ask, is the person still employed, and has their income been negatively impacted by COVID-19? Now, if they answer yes, that question, and we didn't know about it yet, but it just happened, well, you got to go back to the underwriting and you got to maybe restructure, rework that loan. So I just say, as real estate agents and people who are looking to buy or sell, just be aware of some of these issues that your buyers or whatever may be dealing with in this new world.
What I'm hearing you say is, if you've got a loan in process and your income has been cut or lost, don't think you're going to be able to hide it from the lender.
Yes, call your loan officer.
Call your loan officer. They're your partner, not your enemy.
Yes.
and see if they can work it out. But I assume there's probably been some people out there who think, well, I'm closing in 3 days. I just lost my job, but I'm going to see if we can fly under the radar.
Yes, absolutely. Yep. Yep, that happens.
Strategy. Okay. We did just have someone in the comments section ask, I don't know, I haven't heard anything, but maybe you have. Do you anticipate the government possibly rolling out any new loan programs or incentives, AC, which is after Corona?
AC after I haven't heard of AC, so that's good to know after Corona. No, I don't necessarily see any new programs that will come out right away. I mean, depending on how many forbearance options that we have and how that all plays out, there could be a refinance program that comes out. So if you guys remember HARP, Home Affordable Refinance Program came out like in 2010 probably, and then there was HARP 2.0, and we were doing refinances for people that were underwater, and even then had modified loans and all that good stuff. So I think we could possibly see a HARP 3.0 come out. There's been talk of it, nothing really in writing, but some sort of program that if you did had a forbearance plan and now you want to basically refinance that loan and kind of just fix it, clean it up, take that $18,000, whatever it was that you owed, and kind of clean it up and put it into a new 30-year fixed, that you can do that. So I think it's a good chance something like that could come out, but nothing that has been official.
Okay.
Yeah.
Awesome.
Now, I remember when this first started, they, some of the down system of payments, programs and things like that, DPA programs were kind of put on hold. Are we going to see, are we going to see some of those come back?
I think they will come back, but it could be a little while before they come back. A lot of the down payment assistance programs are funded by that whole thing when I was talking about when, if your rate's 3.25, if you go to 4%, it pays back a premium, and then that premium is then, basically used to fund some sort of a down payment assistance program. That's how they keep funding themselves. So it's really hard now to fund some of these down payment assistance programs because there's just no rebate there. There's no one that, there's not a lot of buyers when it comes to servicing loans. Everyone's too scared about forbearance. So until we really know the unemployment picture, how high it's going to get, how many people are going to be in forbearance, I think the down payment assistance loans are going to be really tough to do until we really know exactly what that unemployment picture is going to look like.
Yeah, makes sense.
Okay. Great. That was really, really helpful, Corbin. You definitely answered a lot of questions, and I think we were able to provide a lot of really great details for the public, and hopefully they found this information helpful. If anyone has any additional questions about any of the stuff that we've discussed, or maybe a unique situation, please feel free to reach out to us. We did put Corbin's brand new company website up in the section, but it's to movementhomeloans.net. You can get in touch with him through there, or you can also reach out to us through Facebook or wherever you're viewing this video, and we're happy to help you in any way that we can. Anyone else have anything else to add?
That's it for me.
Sounds good.
All right.
Thanks, guys.
Thank you so much.
Thanks, guys.